Hello, what is going on everyone? Welcome back. In this video, I'm going to be performing a top-down multi-time frame analysis on euro dollar. So getting straight into it, what we can identify from a monthly perspective, we are obviously bearish. The market is making a series of consecutive lower highs and lower lows. If we have a look at the price action to the right, we can identify, looking at this most recent bearish impulse to the downside. Why is this a bearish impulse? Because this move broke a level of structure. This was a monthly level of support that was holding price up. And as you can see, we made an impulsive move breaking below that zone. Not only did we break below that low, but we also broke below this monthly ascending trend line. Okay, so what we can identify is price made the bearish impulse to the downside, followed by the corrective move. Now, if we want to measure the retracement, we take our Fibonacci from the high to the low of the bearish impulse. So what we can identify, price broke below this ascending trend line with a bearish impulse. Then we made the retracement perfectly back up into the 0.618, filling the internal liquidity that would have been on this leg to the downside. We spiked into the golden ratio in confluence with previous ascending trend line support, term resistance, and we have rejected it aggressively and started to make the continuation to the downside. So from a monthly perspective, we are bearish. We have an impulse, correction, continuation pattern, and a potential new swing high at the psychological level of 1.1000. Now, if we drop down to the weekly time frame, what we can identify from the weekly price action is a pretty clear picture right here. Okay, what I can spot here from a weekly perspective is price was consolidating in this weekly range for a considerable amount of time, for a number of months. Then price, after starting to reject the high of the range, this would have induced retail traders into entering shorts. Why? Because obviously we were retesting this area of supply. Okay, now there would have been a huge amount of liquidity above that monthly high, above the weekly range. What the market did is go for a liquidity grab, taking out all of the buy stops above this level. In taking out all of the buy stops above this high and breaking out of that weekly range to the upside, this also induced traders into opening trades, into opening buy trades, long positions, right? So we got a sweep of the highs and an inducement against the overall anticipated direction of the market. Since sweeping the highs and making this manipulation to the upside, price has since broken to the downside. Okay, so from a weekly perspective, we have an accumulation, manipulation, distribution, formation. What we can also identify from a weekly perspective is we have this level of imbalance right here. Okay, now if we look to our right, this level of imbalance, this area of fair value, is sitting pretty much perfectly at parity, 1-to-1. Parity is when euro and dollar is worth 1-to-1. So I do expect a retest of this level at least. If we're not to see a lower low, okay, which obviously would be very, very worrying for the euro dollar, I do at least expect a retest of parity. So this gives me an overall bearish outlook. The monthly time frame's bearish, the weekly time frame's bearish. However, the market has been bearish for a consecutive 2, 4, 6, 8, over 12 weeks here. We have been bearish for over 12 weeks consecutively. So sooner or later, the market will start to provide a retracement. We are testing this level of demand. We are testing 1.0500 psychological level, and we are very overextended to the downside. So just to be clear, my overall outlook, my overall long-term perspectives on the market are bearish based on the monthly and weekly time frame. With that being said, we are very overextended and we are very oversold, and we do expect a retracement move before we see further continuations. This gives us a short-term bullish bias. Now what we need to do is go down to the lower time frames and align our overall higher time frame projection with the lower time frame price action to give us a high probability setup. What we can also identify here on the weekly, just before we do drop down, like I said, we've got that sweep of the high right there. Following the sweep of the high, the market has shifted structure. So like I said, monthly and weekly bearish time frames. We have swept the high and shifted market structure to the downside because we have broke below the previous high low that created the sweep of the high. Now what we need to do, we take our Fibonacci from the high to the low of the weekly impulsive move, which created this market structure shift. And what we can identify, we have the 0.5 and the 0.618 Fibonacci retracements exactly here, in confluence with this level of supply, which created the weekly market structure shift. So overall, this area right here will act as a magnet, and price should get attracted back up into this level where the institutional orders are, okay, so they can reposition themselves short. And as you can see, if price does follow my projection and come back up into around 1.0900, where the 0.618 is, anywhere in between this supply, okay, this will also form a left shoulder, head, and right shoulder formation. So we have many confluences to potentially anticipate a corrective move back up into this level. Now, if we just drop down to the daily time frame and see what we can identify from a daily perspective. Going down to the day, what we can identify is at the moment the market is bearish, right? We are looking for a bullish retracement inside of a higher time frame bearish market. So in order to have high probabilities to look for that retracement, we need to see a shift in daily structure. Now, this is the last lower high. You can clearly see we have the high, lower high, lower high, lower high. This is the last lower high from a daily perspective that created the lower low, sweeping below that low. So if price closes above this area, this is where we'll have a daily shift in structure, indicating to us that the price might start to be ready for that corrective move back up into this level. Now, if we just drop to the 4 hour, see what we can identify from a 4-hourly perspective. Okay, straight away I see an area of imbalance there. We have 4-hour area of imbalance exactly there. Now, if we just go back to those higher time frames, my apologies. If you go back to those higher time frames, just to have a look at our zones of confluence. Okay, there we are. So we have that imbalance right there. Now that fits nicely with the 0.618 and that weekly supply zone. Again, this will just induce more market participants to enter in this position. So it will act as a magnet. So we are expecting price to come into this level. How can we potentially capitalize on that? So at the moment, like I said, from a daily and 4-hourly perspective, until we remain below that high, we could easily continue to the downside and see a new low. Once we break and close above that high, then we'll have a confirmation to wait for a retracement move into a level of demand before we can potentially look at taking this higher. We will be targeting the liquidity that we have here above these highs, this fair value gap that we have here, and essentially the supply zone and the 0.618 Fibonacci taken on the bearish weekly impulsive move. So just to conclude, my overall long-term perspectives on euro dollar are bearish. However, from a weekly and intraday perspective, we are very overextended, and I expect to see a retracement move. So institutional traders can reposition themselves short. That's pretty much it from me, guys. Take care. Speak to you all soon.